Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a huge welcome to our community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. How can you not be excited? Another week of stock market news, another week of dollar cost averaging, another week of slowly and consistently averaging into the market and investing for the long term.
Life is good.
How is that not the most exciting thing you can do?
That's it. Well, we're going to cover some other things today. Obviously, we'll start with what's going on around the world in markets. We've got a community question, or should I say a new investor confession that has come in from a listener that we're going to tackle, and then closing out with stocks that have been on our watch list for the last month that have come across our desk and we would love to talk about.
News and markets.
So today we're going to cover off Airbnb's strategic pivot, the government debt warning, and we're asking with the latest news around Elizabeth Holmes.
Yes, we are. But Bryce, first of all, we should acknowledge the big news of the week. It was front page news, which is that the RBA has cut rates again.
Yes.
Unsurprising. Westpac had locked it in. The markets were pricing in a near certainty of a rate cut. So 25 basis points, which combined with a 25 basis points cut earlier this year, we're starting to see a cutting cycle. I think really the only question for us is how many cuts happen and how quickly they come. That's probably the key thought at this stage. NAB think 6 by...
Well, they think 50 basis points in May, and then 25 July, 25 August, 25 November. That's their current prediction.
And then I think one more in February as well.
And next year.
Yeah. But look, it was expected, obviously, the more rates get cut, it's good for homeowners who are in a home and paying off a mortgage. It's not good for people who are trying to buy a home because prices will likely rise. It's good for growth stocks. It's good for people who hold bonds. But if you're buying bonds, obviously, then the yields will be lower. We've spoken a little bit about how to invest when rates get cut on this channel, but also on Get Started Investing. But I'm not sure we have much more to add.
No, I would say for those trying to buy it is good. It'll increase their borrowing capacity, but it will come with a very likely rise in property prices.
That is fair.
So Airbnb, Ren, have strategically pivoted some of their business. We'll start with their latest earnings report, though, before we jump into it. So this is Q1 earnings, revenue, an increase of 6% year on year. This was driven by an 8% rise in nights and experiences booked, a whopping 143 million bookings. For the business.
Wait, what do you mean? When you say 8% rise in nights and experiences, isn't that their whole business?
Well, as you'll find out, there are other elements that have been introduced to it.
No, but for this?
Yes. Well, yes.
Are you sure it wasn't one or the other?
It says nights and experiences booked.
Oh, okay. Oh, yeah. So like 8% volume growth.
Yeah. Net income, though, dropped 42% compared to a year earlier to 154 million. But the big news that we want to talk about is the fact that they have announced a strategic shift to become a broader travel and lifestyle ecosystem.
Yes, this is the Everything app.
The Everything app, yes. So what does that actually mean? Well, they've introduced a few things. Firstly, they've relaunched their experiences part of the business. I'm sure if you have used the app at some point last year, you would have seen you could book surfing lessons or tour guides or whatever it was at the locations that you were going to visit. But they've now extended that. Well, they've relaunched that and they've now extended that into another sector called Airbnb Services. And this is where you can book, professional services, chefs, personal trainers, stylists, massage therapists, you name it. They are now hoping that people can go on, give their services, but also allow people to book them. And then finally, they have redesigned the app and launched some social features. I thought this was pretty funny. They're trying to encourage group chats for guests who have shared experiences and previous house bookings. I don't know why you'd want to be in a group chat with someone who's also shared a little cottage up in the Blue Mountains, but nonetheless.
I don't know. I have thoughts about this. I previously was an Airbnb shareholder and I'm not anymore.
Mm-hmm.
I don't think this is as big a change as they're flagging. I think the line between services and experiences is quite blurry.
Yep.
You know, like the idea that you can now book a massage therapist under services. I kind of thought you could already book massages under experiences.
Yeah.
In some ways, you can understand what they're trying to do here, which is like they're trying to maximize the revenue that they generate from each trip. And it's like, if we're not just booking the accommodation, but we're also helping you plan everything around it, then hopefully our like average customer value increases.
Yeah.
It should be high margin services for Airbnb because there's almost no cost for them. You know, like if you're running Bryce Lesky's personal training and you want to list on the platform and you have to give a clip of the ticket to Airbnb, that's 15%. Like just, that's almost all profit for them.
Yeah.
So you can understand the incentive for them. If it really does take off, then also there's potentially like a whole other line of business, which is advertising. Because when Bryce Lesky's personal training is competing with 4 other Sydney-based personal trainers for, you know, the travel personal training market, then all of a sudden you might get hit up for marketing spend as well.
Yeah.
So you can see what they're trying to do here.
Yeah. It might not necessarily be all travel. Like if I could get a massage therapist to the house through Airbnb, that'd be nice.
But you could get a massage to your house now.
I know.
Yeah, for me, it's like, is it contextually relevant for people who aren't traveling to go on Airbnb? Like that's a big change.
Yeah. I think that's what they want it to be.
But my big question about Airbnb is this the next leg of growth, or is this an effort for a company that is X growth already? And so if you just look at the past 4 years for Airbnb, here's their revenue growth rates: 77%, 40%, 18%, 12%.
Yeah.
And you get it. Like they have been a category killer. And like they have changed travel and they've been such a successful company and like all of what they've done has been amazing. But you start to think like, what's the capacity, like what's the network growth for Airbnb? Like I imagine their biggest constraint is hosts, and that's a tough bottleneck to try and unplug. And so then you're relying on like price growth and some from experiences, and now you're trying to get some services in there. I don't know. It feels like maybe their growth rate is going to slow.
I think so, and I just look at my personal usage of these types of platforms, and
here we go again.
and my use of Airbnb has slowed in line with those growth rates. What used to be an affordable option, I feel now Airbnbs are premiumly priced.
Yeah, and you know the meme about them, you know, you pay more and then you have to, you know, mow the lawn and pack the dishwasher
take the bins out.
The hotel experience is more catered and luxury. Yeah.
And you know, the user experience on Airbnb used to be awesome, still is, but I think a lot of the competitors have caught up.
Yeah. The social feature one is interesting for me as well because I feel like that is swimming against the tide. I think Airbnb launched quite social. We'll just rent out a room of an existing house and people will host. Yeah. And then the trend over the past decade has been people want to book entire homes.
Yeah.
And competitors have literally started with that as their selling point, i.e. stays. Their whole marketing campaign and their whole selling point is get the whole home.
Yeah.
I feel like social features is swimming against the tide. Yeah. People want less social on their hotel booking experience.
Yeah. I don't want to be talking to someone who in a group chat. Anyway,
maybe that's just me being antisocial. One to watch.
All right, Ren, big news out of the US last week. Moody's, which is a ratings agency, they cut the US government, debt rating or credit rating from AAA to AA1. Now, AAA is the highest level rating that you can get. AA1 is one below that. I think there's 23 ratings in total. So they haven't fallen far. But nonetheless, this does follow a trend. S&P Global, they cut their rating back in 2011 and Fitch did it in 2023.
The market fell a little bit. There's a little bit of concern around US government debt. The rating obviously matters on the margins, but really the story is US government debt, full stop.
Yeah.
US government debt is now over 120% of GDP. Interest on government debt is now the fourth biggest line item on the US government's budget. Just interest. And if the trend keeps going, it's very quickly going to jump defence into third place.
Yeah.
For comparison, Australia's debt to GDP ratio is around 40% from memory, so far better. I mean, for comparison, the Australian government still holds AAA credit ratings, so take that, America.
Yes.
But look, it's not to say that closer to home we don't have our own debt problems, and the Victorian state government budget is probably the one to watch. Obviously, this week the government handed down their latest budget. They did get a surplus for the year, but the story is really the long-term government debt that Victoria holds. It's expected to hit $187 billion by 2028. I had a look, and the Victorian state government debt broadly in line with New South Wales government state debt. But you don't hear as much about issues with the New South Wales state government debt.
No, you don't.
Yeah. So Victoria's credit rating, I had a look, AA plus from Fitch, AA from S&P, and AA2 from Moody's. So a little bit lower. For comparison, New South Wales has AAA from both Moody's and Fitch, and AA plus from S&P. But Bryce, to close out this segment, I'm going to put you on the spot and ask you a question. Which Australian state has the best credit rating?
WA.
Nailed it.
Yeah.
AAA credit rating from both S&P and Moody's over in WA.
Nice.
And why this matters is really just cost of borrowing.
Yeah.
And, you know, the higher your credit rating, the cheaper you can borrow money. And also it's an indication of risk. But I don't think anyone's too worried about the US government defaulting on their debt.
No.
Because they can always print their way out of it.
They can
That
indeed.
does potentially a very dramatic inflation consequences.
Huge.
Anyway, one to watch. Trump will obviously rail against Moody's. I think he already has.
We want to shut them down.
But we wanted to close out this news segment with a story that had us asking what the, and it's to do with Elizabeth Holmes, the former founder of Theranos.
Yes. Now, she became famous for her blood testing startup, as you said, Ren, Theranos, and made a great book,
Bad Blood.
Also, a number of documentaries about this story. Just to really recap what it was, she claimed she could do, 100 different types of blood tests with one pinprick of blood. Turns out that it was all fake. As a result, she's currently serving a prison sentence for defrauding investors after it was found that it was, in fact, not real and she was making up the test results.
Yes. So the business world was surprised to hear about a new startup looking to raise money, Hemanthus, hopefully I pronounced that right, started by Elizabeth Holmes' partner, Billy Evans.
It's unbelievable.
Now, Hemanthus describes itself as the future of diagnostics and a radically new approach to health testing. You feeling a bit of deja vu, bro?
It's wild. Why would he do this?
Well, so it has us asking the question, is Elizabeth Holmes soon going to be involved in a second blood testing startup?
Well, I'm not sure how long she's got left on her sentence, but from memory, it was quite a long time. I would be staying well clear of this, but good on her for sticking to her guns.
Yeah, 11 years and 3 months she was sentenced to. So I think she started serving it in 2022.
Yeah, so she's still got a while left.
Yeah.
Anyway, we'll keep an eye on this one. But this is part of the What the section in our daily newsletter where we, I guess, put stories that we think are a little bit outside the traditional news headlines that we summarize in dot point version, and always have something that keeps us a little bit entertained. So if you're not subscribed to our daily newsletter, make sure you do so via the link in the show notes or in the description below.
All right, well, we are dusting off a segment we haven't hit in a while. It is time for Investor Confessions.
In the confession booth, everything is anonymous.
All right, Bryce. Well, the way this works is the Equity Mates community shares some of their deepest, darkest money secrets with us, and we'll share it anonymously, of course, on the podcast to help you feel a little bit better about it, maybe give you some advice. You have got the secret or the confession today.
I got the confession. Yeah, it ends with a question for us though to close out. So at 25, I feel an intense hunger for money and wealth, way more than anyone else I know. I grew up in an average Australian household, went through the public education system, and it wasn't until uni and entering the corporate world that I started noticing the financial gap between myself and the private school crowd, especially in corporate Australia. With constant conversations in the media about inequality, housing affordability, and to an extent cash rates and market volatility, that hunger to build wealth has only grown. Many people around me seem to have safety nets, parents who can help them buy property or generational wealth, for example. While my parents might be able to help with a deposit, it would come at the cost of their retirement, and I couldn't live with that guilt. So here I am, mid-20s, stuck on a lower-end corporate salary, constantly counting my savings and obsessing over my investments. I know the basics, I have ETFs and stocks that are in green slightly, but I still feel I'm falling behind. I've changed my portfolio strategy as I've learned more, but sometimes it feels like I've missed the big once-in-a-lifetime opportunity. It's frustrating that no one around me talks about investing or financial literacy. I'm not chasing wealth for flashy reasons. I want financial freedom. I want to travel without worrying about the cost, buy a home without mortgage stress, and simply live life on my terms. I still enjoy my life now. I'm not a total penny pincher, but deep down I always wonder, is it wrong that I feel so desperate for money and wealth at my age? How did you guys get comfortable with your investing decisions without constantly questioning whether you could or should be doing more?
Wow. Great confession.
Great confession.
I think, well, you step out of the vault or the
back out
the confession booth.
Yeah.
I think that feeling is very common.
Yes.
I think let's start acknowledging that. And let's start by acknowledging that wherever you are on your investing journey or your life journey, like that feeling will probably be pretty present. And I think just human nature is to always be comparing yourself to others. And I think, I still feel it when our mates or people we know are like just taking leaps and bounds ahead of us.
100%.
And, we're getting to an age where people are starting to buy like the family homes and it's like, oh God. Yeah.
Yeah.
Or you hear about, people who were early on Bitcoin or, some of that stuff. Like you still feel it. It doesn't go away. I now have a level of confidence in my financial knowledge and my financial plan, which definitely lessens the noise.
Yeah, I think if you have a plan, as you said, Ren, it helps with this. I felt this a lot when I was at uni, to be honest. Came from a country town to a university that lived on college that was full of private school kids, and I definitely felt a sense of like, wow. I was exposed to a level of wealth that I'd never even seen before. And I was like, holy shit. And you kind of do find it a little bit motivating in a way, being like, that's possible. But I think you've just got to remind yourself that making a comparison can sometimes sidetrack you from just doing the most that you can with what you have in front of you. And so I think in this instance, thinking that you're behind when you're in your early 20s with ETFs and stocks and thinking about this and thinking about building wealth, I don't think you're behind. I think you're actually early.
Yeah. I mean, if you're investing in your mid-20s, you're doing so well.
You were so far ahead of a lot of the people that he would be talking about.
Well, and also put it this way, a lot of people who are listening to this, who are not in their mid-20s, who are a bit older, are listening to you and saying, I wish I could go back and be you.
100%. 100%. So in that instance, I think you're not behind, you're early, you're on track, you're investing, you're learning, and I think more importantly, you're thinking long term. I think something you really struggle with in your 20s is to actually think long term. I don't think the feeling for financial freedom is wrong. People don't really start actually caring about that until much later in life. So thinking about that now. But I think the main thing is like consistency is key, not trying to be perfect. And Warren Buffett is the classic example. Like he didn't make 95% of his wealth came after he's 50 or 60 years old. If you're starting in your 20s, you will have everything that this guy or girl spoke about: financial freedom, buying a house, not worrying about money. It's just going to happen. You're going to get rich slow. It's not going to happen overnight. So be patient.
I think my final thought is like there's two competing desires in what you've written here. One is for financial freedom and the other is to keep up with other people you see in your life. And I think if you focus on financial freedom, what you need to give yourself choice and flexibility in life is probably far less than you think. And it's definitely far less than, you know, some of the private school kids that you were mentioning in your confession have. You know, financial freedom is the ability to be able to live on a lower paycheck, but to do a job you love, or to work less hours because that's what works for you, and have the investments to supplement your income so you can live the lifestyle you want. Or, you know, it's to get out of the city and get out of the rat race knowing that like you've got your assets working in the background, or it's to take more time off when your family's young and you can really enjoy those years, or whatever it is. And when you start thinking about those being the goals, like you don't need a multi-million-dollar portfolio. You don't need to have enough money to retire at 35 and never work again. Like financial freedom and financial choice, I think, is really attainable for most people, but especially for people who are starting to invest in their mid-20s. For me, it's like recognize that there are two things that you're feeling there, and I think focus on that first one, the financial freedom and what you can build in your life and the choice you can give your life, and focus less on other people's lives.
Yeah.
Because you know what? Even Warren Buffett looks and sees people richer than him and probably, you know, thinks about what Elon Musk can do with his money that he can't do with his money. But, you know, like a better example is, you know, multimillionaires would still look at billionaires and think they have a level of freedom that I don't have.
Yeah.
So I think wherever we are on our financial journey, if we can kill that comparison and just focus on what we want out of life, live a good life, whatever that means, build meaningful relationships, not work ourselves to the bone, have our investments supplement our income to give ourselves choice, I think that's where the focus can be.
Well, if you have an investor confession as well, or a question for us more broadly, we would love to hear from you. Head to equitymates.com/contact, leave us a voicemail, or you can write to us as well. We're going to take a quick break, and on the other side, we're going to look at some of the stocks that have come across our desk in the last month. We'll be right back. Every month, we speak to some of Australia's best investors to pick their brains on what stocks are interesting them. Here are some of the ones that we have found most interesting. Ren, stocks on our watch list.
Yeah, well,
there are a number.
You've got 4 that you've put here today. I've got 2, and I reckon one that I'm going to surprise you with something that I think is going to get you very excited. So,
wow.
Yeah. I'll save that one to the end. So why don't you kick us off? What are some of the stocks that you've heard either in your own research or from experts that you think are interesting?
One that we've heard from 2 experts in the last month is Nick Scali.
Yeah. People sleep on this Nick Scali story.
Yeah.
I mean, still I do, to be honest.
Slept on it.
Furniture doesn't... I mean, is this a pun intended situation?
What do you mean?
Sleep on it?
No,
a furniture retailer?
Yeah.
But yeah, for people unfamiliar, Nick Scali is one of the big furniture retailers here in Australia. But the stock market story has been really impressive for a long time.
It has been. Their most recent earnings report, let's just have a look at the numbers. Revenue up almost 11%. They've had a pretty successful expansion into the UK. Net profit is down 22% to 33 million. That has been impacted by freight disruptions and restructuring costs that they're going through. However, despite that, they are pretty bullish on their UK growth and have displayed some pretty strong margins as well. So a company that just keeps popping up whenever we talk to Aussie investors.
Yeah, it's up 242% in the past 5 years. But the question for me is always like, how big can a furniture retailer get?
Well, they're going UK, so...
Yeah, because that's worked well for Australian retailers in the past.
Definitely a big one to watch.
What about, let's stay in the UK because your next one is from the UK.
Yeah, found this one fascinating, and this is Compass Group. It's one of those companies where you're just reminded of the, you know, going after the biggest in their class, and these guys are the world's largest catering company. They contract themselves to, business, education, healthcare, sports, you name it. Like they do prisons, large scale catering across the globe. Some examples were Australian Open, for example,
or Google
offices. The footy. So huge business. Revenue in their last earnings increased almost 9% to 22 billion. Operating profit up almost 12%. They raised their dividend by 9%. Just one of those businesses that eats up their competition. Pun intended again.
So this company we heard from Stephen Arnold, who we interviewed on our Basis Points podcast. That episode is live, so you can go and listen to the episode in full and hear him break it down. But one interesting thing I just really stuck with me is when they go and pitch these companies, because they have such buying scale now, because they buy so much food, they can negotiate really good prices. Their key sales pitch is to, they go to Google and say, stop catering yourself, we'll cater for you. We can instantly reduce your food bill by 30%.
Yeah.
Like it's a pretty strong sales pitch.
It's hard to beat.
Yeah. And then it's really sticky because then even if you're not happy with them, you don't like their menu options or whatever, it's like, well, if we give them the flick, we've instantly got to increase our budget for food by 30%.
Yeah, very sticky.
So, that's an interesting one. Go and listen to Basis Points or go and watch Basis Points on YouTube.
The biggest buyer of food in the US.
The biggest buyer of food in the US?
Yeah.
What, like bigger than Walmart?
I remember asking that and he's like, the biggest buyer of food in the US.
No.
Yeah, I said that, even bigger than the retailers. And he said, yeah.
There you go.
Yeah.
All right. Well, you've done two. Let me jump in here. Because one stock I've been hearing heaps about is Hims and Hers.
Yes.
Have you been seeing this?
Hims. Yeah, I keep track of it because it's...
No, Hims and Hers.
Yeah, I know, but I think ticker's Hims.
Ticker's Hims, yeah.
I have heard of it.
Yeah. There's an Australian equivalent.
Yeah, it's...
eucalyptus.
Whatever their spin-off brand is for eucalyptus,
So, Hims and Hers is a telehealth giant. They got a lot of buzz around GLP-1 drugs because there was an emergency designation because of like Ozempic shortages in the US. And so they were compounding their own version of it. That emergency designation ended and everyone was like, ooh, this is probably not going to be good for Hims because they were making a lot of money out of selling these weight loss drugs. But then they struck a deal with Novo Nordisk. It seems like they've navigated it pretty well and now they're going to distribute Ozempic through their, whatever the weight loss version of it is.
It's Wegovy.
Yes, Wegovy, yes. So they'll be distributing for Novo Nordisk now. But I wanted to have a look a bit closer at the company because, as I said, I'm just hearing about it a lot. I'm seeing a lot on Twitter. So here are some numbers. Revenue between 2019 and 2024, so 5 years, 83 million in 2019, 1.48 billion in 2024, 78% compound annual growth rate.
Wow.
Close to doubling revenue every year.
Wow.
78%. They flicked profitable in the last quarter of 2023.
Love that.
And they've been profitable every quarter since. But here's the thing, the growth rate, the revenue growth rate is accelerating. So the most recent quarter, it had its best year-on-year growth as a listed company, up 111%. So that's what you really like to see in a growth company is the revenue growth rate accelerating. Still founders very involved. 2 of the 3 founders each own about just shy of 5% each. And they just raised $1 billion 2 weeks ago.
Wow.
Yeah.
To go hard on...
everything.
Okay.
Interesting one, Hims. It's like, it looks expensive, but, the question is, can it grow into its valuation, I guess?
Wow, yes, very expensive.
Also, competitive sector, I reckon, telehealth.
But growing.
But a lot of opportunity.
A lot of opportunity, yeah.
All right, you've got 2 more for us.
Yeah, a quick one. While I was doing my 500 to 5,000 research, I got reminded actually by a listener who I was chatting to for a upcoming Pimp My Portfolio. Vertiv Holdings, this was the very first stock I actually bought in the 500 to 5,000 challenge. Should have held it. It provides critical digital infrastructure solutions for data centers, and it's been going really well. Revenue up 24%, net income 164 million. That's a turnaround from a loss a year ago, and its guidance has been pretty strong, forecasting almost 10 billion in revenue. They've signed a strategic alignment with NVIDIA. There's just been some pretty positive headlines coming out from Vertiv. It's actually quite large, 31,000 employees, operates in 40 countries around the world. So
yeah, it's a $40 billion company.
$40 billion company, yeah. So a reminder, don't try and time the market. market, just stick with the stocks that you pick. And
well, I mean, it's down 10% year to date.
yeah, the reason it came back up the
50% in the past month.
Yeah.
So
when
you're trying to 10 bag your money, like.
Yeah, I know. And just to close out, Ren, always love to keep an eye on Disney. They recently reported revenue up 7%. But the big news came out of their streaming division. They achieved a $336 million profit, which is a pretty significant increase from a $47 million profit a year earlier. Obviously, that's Disney Plus and Hulu. They had about 1.4 million subscribers, reaching 126 million in total, and also announced a new theme park to be built in Abu Dhabi.
I think the impressive thing for me about Disney's report was that every sector, like every business division
grew.
saw profit increase, revenue increase.
The Iger effect. It's back.
Yeah. All right, nice one.
You had a teaser?
One more for me. Actually, just while we're talking streaming, have you been following this HBO Max thing?
As in like the...
5th rebrand in 5 years?
I didn't know it was their 5th. I thought it was their...
HBO Go, HBO Max, and then I think there was another one, and then just to Max, and now back to HBO Max. Yeah.
I mean, I think they finally realised where their value lies.
Yes.
HBO Max.
I'm hoping that there's not a lot of Warner Brothers Discovery shareholders out there, because it has not been a fun ride since the merger. CEO still gets paid $300 million or something, though.
Over the past 5 years.
Yeah. So it's been fun for him.
That's crazy.
All right. Anyway, that's not what we're talking about. Last one I want to talk about is a pharmaceutical company called Regeneron.
Okay.
Have you heard of it?
No.
Okay. So the news is they agreed to buy 23andMe for $256 million. 23andMe, the genealogy testing kit, was once valued at $6 billion. So a big fall for them. I actually really loved the 23andMe thesis. Never owned it, thankfully. But even from the start, their whole thing was we make a mass market genealogy product to get people's DNA, and then we have a massive data set to accelerate drug discovery and development.
Yeah, imagine what they could be doing that with all this AI now.
Yeah.
Maybe that's what Regeneron wants to do.
But the reason that I said you would be excited about Regeneron.
Okay.
So you...
What would it be?
It's a quit smoking device.
I knew you were going to say that.
It's not. No. Now, for people who watch us on YouTube, they may have noticed that Bryce has changed a little bit over the past few years.
Growth hormones.
You've been hitting the gym pretty hard. You've been trying to bulk. Well, Regeneron have a drug that's in phase 2 clinical trials called Trevogrumab.
Why do they make these names so hard? Trevogrumab.
Trevogrumab. In a nutshell, it's a GLP-1 drug for muscle development.
So it's the opposite.
No. So essentially the thesis is when you use GLP-1 drugs for weight loss, they say about 40% of the weight loss is muscle loss.
Yeah.
And so they are doing a stage 2 clinical trial in combination with Wegovy to test if it can have weight loss without the muscle loss. But this product as a whole is essentially, I think your cells have like things that cap growth, and essentially this is to try and like uncap their growth, which actually, I mean, honestly, you're kind of getting into cancerous territory, but that's the trial. So it's like
so it's not to stop the weight. It's not to stop whatever's eating the muscle, or it's to just let the muscles continue to grow.
Yeah, it's to promote muscle development.
While you're trying to kill fat.
While you're trying to
lose
fat. Yeah.
Wow.
So next version of steroids coming soon?
I guess. Maybe. That's what it sounds like.
You'd take it,
I'm so bullish.
You'd take it.
I'd be interested. I am very bullish on this space, as you know. Not on the performance enhancing or anything like that, but I think like in 20 years, the stuff that you'll be able to take to manipulate your body is just really wild. I don't know if it's a good thing, like mentally. I think it'll give a lot of people a lot of body issues, body image issues.
Anyway, not a stock that I'll be buying, but certainly one I'll be watching for Bryce's Christmas present in 2028.
2028. Love it.
But yeah, there you go, 6 stocks. So just to recap, we had Nick Scali here in Australia, Compass Group, Vertiv Holdings, Disney, Hims and Hers, and Regeneron. a number of stocks that we're hearing, and a reminder that that's why you've got to listen to everything we produce here at Equity Mates, because
That's it.
we're speaking to some of the best investors here in Australia. We're picking their brains and picking the eyes out of their portfolios to get ideas that we can use in our investing journeys. So subscribe wherever you're watching or listening to this. Head over to Basis Points and check that out as well.
But that does us for today. We'll be back in your feeds tomorrow. Ren, it's been a pleasure as always.
It's a pleasure's been all mine.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.